In this video, guys, I want to talk about being smart when trading support and resistance. Stay tuned. Hey traders, a warm welcome to you. Thank you so much for joining me. All right, so being smart when trading support and resistance, what the hell does that mean, Mark? What is this video all about? Okay, so support and resistance, we know what support and resistance are. I don't need to go through it. If you don't know, by the way, and you're brand new, I've done a video where we talk about support and resistance, or go and check out, I think there's loads of resources out there to tell you how to kind of draw these things, and then come back and maybe this will kind of help you out a little bit more rather than going down the rabbit hole of just trading support and resistance blindly. So what do I mean by being smart? Something about being smart is you have to think about how valid the level is you've drawn. So very often, guys, as traders, we kind of have our chart and it's on here and it's it's chugging along and there's our levels and we've got this levels and then we go, okay, where's our support and resistance? And we look at it and we go, and we got all these lines on it and we start drawing our lines on and we start saying, okay, yeah, you know, I've got a little level here that I can maybe extend out to here. I've got this level here that I can extend out to here. Or maybe I've got a level here. Oh, I've got a little level here. You know, you start going, oh, there's one here. Oh, there's a little one here. Oh, there's one here. You start drawing on massive amounts of levels, so you can do. And the thing is that not all support and resistance is created equal. So I'm talking about dynamic support and resistance, static support and resistance here, not dynamic as in moving averages or a VWAP or something like that. Now, when you look at a support and resistance level, the whole idea, the reason we're drawing it is that we expect it to hold or not. And the reason for the support and resistance is it going to break out through it or is it going to hold? Those are the only two questions we're asking ourselves. And then we're saying, okay, well, if it's going to hold or we think it's going to hold, I want to go short or I want to go long, depending if it's a short or a support resistance. The same with the breakout. So this is helping us guide our trades. So the better we can get at spotting good, solid support resistance levels, the better we can get at trading the breakout or trading the bounce. So if we look at this as an example, we might go, okay, what's our support resistance? We don't want a lot of this stuff on here. So the first thing is we just strip back all the minor ones. So we don't want stuff like this here, we don't want that one there. You know, we don't really want this one here. We probably don't want that one there either. And you know, that's probably a daily high and a daily low. So we're left now with a high and our low, and these thick levels. This is a decent level, right? This one here held for quite a while, pulled back to it. This one here is quite good as well, and this is almost pulled back to it there. Let's kind of fill these in a little bit that we rubbed off with the finger. So we have this scenario now where we've got some just thick levels. Now in this situation, you might be like, well, you know, it's range bound, etc., blah, 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 and it's harder to trade. Now if you're range bound situation, the wider apart the support and resistance, the better. Because we know in a range bound situation, the further the market goes, the more stretched it gets, the more likely it's going to run out of steam, the more likely that level is going to hold. So if we've already done business down here and we start to claw our way back to here, knowing that this was a big thick level before and it goes straight up there, that might be a nice place to get short, right? That all of a sudden becomes a smart place to consider, because it's not like a little level, it's a big thick level that was key from before, and now we've run up to it and got a big kind of move in a short period of time. Assuming there's no sort of catalyst or maybe there's some sort of fake out here, you might want to be saying, okay, I'm going to sell that, because that's a much better place to sell than trying to get on some minor level that we kind of drew here that we're extrapolating out here. You say, okay, what's a major level and would match an extended move? So in a range bound condition, we want to see extended move and a major level. Forget your minor levels, forget the small moves up to it, the extended move that has a stretch spring, and then imagine a spring stretch, and then it finds kind of some level of resistance. It's more likely to reverse than it is when it's just getting going and kind of blasting through. So that's the kind of approach when you're trading range bound conditions. Right. Now imagine we had, before all this was, can't even draw this up here, maybe you can see that. Yeah, imagine we had a big downtrend and now we're having this flag here. Now, how's that change things? Well, okay, if we started to draw this support level in here, we've got to be very careful, guys. We've got to be very careful considering that any support is valid when we're in a trend situation. So in a situation like this where the trend is heavily down, imagine heavily down, and we're kind of consolidating at lows, we've got to be very, very careful about using support. Now, okay, support can hold, okay, we can trade a range and that's fine, but the chances are a trend is going to continue for a decent period of time, right? And that's not always the case, but we're far better aligning ourselves in direction of the trend. So what does that mean? It means that instead of looking for support, we look at resistance. So resistance, as the market's gone down lower, pulls back up and starts banging its head. Imagine this level here is a big, thick level of resistance. That's far better than this little miniature support, especially when we've seen a fake out there. So all of a sudden that short becomes way more meaningful than any buy if it came back down to here. Because you're basically saying if you buy there, the trend is not going to continue, and you've already got the weight of it. For whatever reason, the weight of that market is in supply mode, supply. There's been a bit of demand holding it, but the likelihood is that going to continue. And so if you're in a downtrend, you're looking for resistance to sell at. You're not looking for support, you're looking for resistance. Now some of you are going to go, well, I want to see the end of a trend. And fine, if you want to take things more advanced, you might go, where's that trend going to bounce? But very often it will break through a support level and it will fake out. At the end of a trend, we don't often get bounce off a support clearly. We might get one, might get another, then the third one might flush through before it's a proper reversal. Very rarely do you get a bounce and a clean reversal from it. So, but more often than not, we get a push up to resistance that stalls, push up to resistance that stalls, and goes lower. So range bound market, you want a wide range or decent move between the levels on the outer edges of the range. And I'm not necessarily just saying the range, but maybe some key levels in the outer sections of the range to the market stretch as it's got to that. And don't forget where it's come from is very important. And then from a trend situation, we want to be trading in the direction of the trend. So rather than having an equal weighting on your support and resistance, saying, well, that's a support, that's a resistance. No. I start to give this like an 80% chance and this a 20% chance. And that's only because of this before. If this was just purely range bound, you might say, well, they're equally valid depending on how the market gets there. But if the market's pushing lower, it's a trend condition, lots of pressure on it, then all of a sudden I want to see it go through and find some resistance by banging its head on the ceiling, bang, bang, bang. That then becomes more likely because you're in the direction of the trend and you're seeing some levels, some sellers hitting it, much more likely to hold rather than it finding a floor. It's just a matter of time. We do get trend reversals, of course we do. But if you're thinking in terms of probabilities, we should be as a trader in longevity and consistency, giving more weighting to the level that's holding in the direction of the trend is a far smarter way to trade support and resistance. All right, guys, hope that's valuable. Hope this helped. Keep this managed. The next one. Bye-bye.